Well, we've arrived at the end of Q2 2014, so it's time to summarise the last quarter and the first half of 2014 in the high street retail investment sector. The end of Q2 leads us into where the first half of 2014 is. We are now up 30% on the same comparable half for 2013. The rolling year to date at the end of the first half of this year shows approximately £1.21 billion worth of transactions, which is up 2.5% on the same time last quarter. So it shows steady progress. Funds and privates are still the most active in the market, at 76% on the sales and 75% on all purchases. The notable deals of the last quarter, the standout largest deal was the Manchester Royal Exchange sale, M&G selling to Tristan, Trinity Investment Management, backed by Starwood Capital at over £45 million. It's interesting to note in that it's private equity money coming into the sector, which has always been traditionally too granular, other than in large portfolios. Other deals, and a quantum step down, Aviva sold a large block in Crawley, a secondary location, and it's a bit of a secondary town at the moment. They sold that to Markle Capital at just over £10 million. And then below that you've got a sale of Ipswich, the Hennies and Moritz. It was sold to PPF, care of CBRE Global, at just under 7%, £8.4 million. And then lastly, M&G sold another block in Brighton, very prominent but secondary location, achieved over £8 million, which is just under 5%, which was a standout deal for a secondary block, albeit in a good city. I think it's going to be very positive. I think we are in for a good year this year. There's a huge amount of money chasing around for retail product in general. The problem with our sector, the high street sector, is it is very granular, generally very small lots. In the last quarter, the average lot size was £3.5 million, give or take. Lack of stock in the market. There isn't much decent prime kit around, and what is attracts good pricing. Of the 12 deals in the last quarter that were sub 5%, all of them were in the London suburbs, bar 3, and those 3 were one in Brighton, one in Cambridge. Yeah, it was very, very tight. One transaction that actually isn't featured in our figures is the sale of 127 Oxford Street that we undertook on behalf of Blackstone earlier this year, which was a trophy asset, if you will, whereby most of the interest was from the Far East, and we ended up guiding £12 million and substantially exceeding that with a yield down in the low 2s. And that and an awful lot of central London would distort the figures that we've been reporting on, and as such we've kept them out of our numbers. The big challenge for the sector now is a lack of product, and it'll be a very interesting update at the end of Q3, when I look forward to updating you where the market is at that point.